Hi everyone, welcome back to Equipoise classes. I am Surbi Gupta and these are the series where we read economics from Tamil Nadu board book. But as I always say in the beginning of each video that the book doesn't matter but the concepts does. And I think these are the concepts that anybody who's interested in economics or you're giving any exam or even if you're in class 12, class 11, whatever class you're in, it's just beneficial for each and every one of you. So I'll quickly begin the video by sharing the screen so that we don't waste any more time and we can talk while discussing the content. So today's method, we are currently doing methods to measure national income and we've already completed product method, or we also call it value added or inventory method. Today, what we are going to do is income method. As I explained you in yesterday's video as well, that, how do we get, there are factors of services, factors provide their services from household, you can say, to firms, and then in return the firms pay them payments, factor payments, and those are the payments, the land, labor, capital, enterprise are the factors of production, and they get rent, wages, interest, profit, and whatever they receive is known as their income. And when we add up their income, the income of all the factors that they've gotten, so when we add that, we get national income through income method. Okay, so let's read what's written there. This method approaches national income from the distribution side because it is the payments are distributed because the factors provided their services as factors of production. Okay, under this method, national income is calculated by adding up all the incomes generated in the course of producing the national product. So, what are the steps involved? The enterprises are classified into various industrial groups. The factor incomes are grouped under labor income, capital income, and mixed income. Okay, so how does that happen? Hold on. Yeah. So labor income में क्या क्या आता है? Wages, salaries, fringe benefits, employers' contribution to social security. Okay, these are categorized as labor income. These are added as labor income. Then there's capital income, which is profit, interest, dividend, and royalty. Then there's mixed income, farming, sole proprietorship, and other professions. Like if you're self-employed, what is your income? Is it goes into the mixed income category. Okay, so the national income is calculated as domestic factor income plus net factor income from abroad. Like your national income is wages, rent, interest, profit, and then there is R minus P. What is R minus P? R is export and P is import. We also call it export minus, so export minus import. We also does that, external sector. Okay, the income of external sector. Then the method is adopted for estimating the contributions of the remaining sectors like small enterprises, banking and insurance, commerce and transport, professionals, liberal art and domestic services, public authorities, then house property, and foreign sector transaction. Okay, so the data on income from abroad, the rest of the world sector or the foreign sector are obtained from account of balance of payment of the country. We from the balance of payment of the country, we get the income from abroad, like what is the net factor income from abroad. Okay, so what are the precautions that we need to take care while using income method to calculate national income? While estimating national income through income method, the following precautions should be taken. Items not to be included are transfer payment, because no factor service is generated, and there's nothing that has been like service has been done in amount of payment. So that is what the transfer payment is, one sided payment. No service has been produced, so it should not be included, like pension, social insurance and all, scholarships and all also. Then the receipts from sale of second hand goods should not be treated as part of national income. Okay, then windfall gains such as lotteries and all, again, no service has been generated, so or no output has been generated, so it is not the value of output. National income ka definition mein it is the value, final value of output. So then windfall gain should not be included. Corporate profit tax should not be separately included, as it has been already included as the part of company profit. So company ka profit is corporate profit, so it should not be separately added to avoid double counting. Okay, then items that need to be included: imputed value of rent, like if you are teaching at your own home, okay, you're using your house for teaching as a coaching institute, so you're not paying rent, but you should calculate the imputed rent and the value, and it should be included, okay, which are self-occupied houses. Then imputed value of services, if you're producing any services, then it should be included. If maybe you're in your family business, so it should be included. So these are the items that should and should not be included, which is under the precaution. And with that, we have completed income method, basics of income method, and we'll towards the end of the chapter we'll also solve numericals so that you're more clear. Because see, this is just an understanding of what is income method and what should be included and what should not be included. But once we start calculating the numericals, or we solve the numericals, we get a better hold of the method, and we get to understand in more depth and detail. Okay, that is what we are going to do towards the end of the chapter. So that's it for today, and tomorrow we'll come up with expenditure method. Till then, stay tuned. Keep smiling, stay healthy, keep practicing, like, share, and subscribe. And I'll see you tomorrow. Till then, take care.